today on the Tearsheet podcast.
It's sort of like what Snapchat had when they had these millions of users and they didn't know how to monetize on them, but they just had them. Now they had to figure. It took them a while to figure out exactly how to offer which product that they would offer and which additional products they would offer. But because they had such a loyal fan base or customer base, and I think the same thing with Credit Karma, Dave. Betterment, like you're saying, is that once someone likes it, they're gonna be like, sure, I'll use this for everything. It's with the proliferation of APIs and fintech as a service companies and how easy it is to plug in a Plaid or a Square or a Stripe or create a digital wallet or Python libraries and everything else. It's really easy, and I think that gets into the bigger
Python
question also,
libraries?
which I don't know.
Welcome to the Challengers Podcast. I'm your co-host, Zach Miller. With me is Josh Liggett. Say hi, Josh.
What's up, Zach? How you doing?
And we're here for a 2019 wrap-up, huh?
Yeah, we wanted to get back and sort of give a little end of the year season's greetings. We're cheery with lots of wine and lots of spirits. I was in Germany last week, so I had some nice mulled wine. That was a lot of fun. So it definitely gets you in the mood to talk about challenger banks that happened in everything in the industry in 2019.
And it was a festive year for challenger banks, I have to say. It was an inaugural year of coverage of challengers. Obviously, they've been around before, but they kind of just made a mark on the map this year. And one of the ways they did that was with lots of colors, right?
Oh, we
like that segue?
With this?
Yes. So like this was the year of colors. One of the big themes that we saw, not just in challenger banks, but in fintech in general, were new colors cropping up in debit cards, right? We've got Revolut, it felt like almost every month was coming out with new gold and rose gold and space metal. And I know you love this theme, Josh.
It's my favorite thing in the world to talk about the colors of credit cards. It's really funny that's like the big thing that happened over the year. I think it sort of can talk to you about the state of challenger banks right now, that the big differentiation is what color the credit card is, with what's going on. But it's been definitely interesting. I think we had Apple Card launched and people thought that it was going to be a really, really big deal. I remember everyone was going crazy when it happened. If I recall, you and I were a little more skeptical about the matter.
Sanguine, yeah. Apple Card has been a monster, but the form factor. I think again, a lot of this is tongue in cheek, Josh, but the form factor is important, and it is one way in a growing sea of sameness for banks to stand out and to get customers happy to whip out that card, right?
Yeah, I mean, like in all seriousness, it's something that consumers want, and if consumers want it, you have to give it to them. So, if they want this colored credit card, and you're going to be able to acquire them in a business that's so heavy on acquisition. The level of differentiation in terms of needing to figure out any type of leg up on the competition in challenger banks, which is so acquisition driven, is super important. So anything you can do to differentiate yourself is really important.
And to keep that card top of wallet, right? Like we've seen that, beyond the subscription model, like really the main monetization engines through interchange fees. So you got to get your users using that card. So.
Yeah, absolutely. As much as I hate it and as much as I think it's ridiculous, it is something that's important. It is a status symbol. I do recall I saw something where the Apple Card at least had some issues regarding something went viral, if you recall, where people were getting different rates depending on their gender, depending on a lot of different areas. That was something that sort of came out that was sort of a little turd in the punch bowl of what they were working on. But it's definitely a status symbol. It's similar to, when Puff Daddy came out with a black card back in the day with Amex Black Card, of what that meant sort of to the overall user, having the phone and having your card by your phone, or taking something out that you believe in, that you respect, in terms of having a card that you like and that looks pretty as well. Is something that's definitely important for the user and for banks.
It's definitely a status symbol. And speaking of status, like this was a year also where we saw some massive fundraisings and unicorn valuations, right?
Yeah, I thought you were going to go that way with the being jolly and merry because everyone's got so much freaking money, to after all these monster unicorn rounds. I mean, I don't even know the number. It's such a big number of how much money was raised this year for challenger banks. These
I
really
think I
big
saw
valuations.
over 3 billion total.
That, I mean, yeah, it would not surprise me. I was going to say like 2 or 3, but yeah, I wouldn't be shocked if it's higher than that also. But it's just incredible how mature the market, not even mature, but how mature the funding is in the market. The products I think are still growing, and the challengers are still trying to figure out exactly where they fit in. But there's been a lot of money thrown at this problem for sure.
And the use of proceeds, I mean, they need to a lot of the challengers, at least with like a global focus, need to raise this money, right? Because they're buying licenses in local markets and setting up local operations. I mean, they're gonna need to spend a lot of money to grow these things.
And they're trying to expand acquisition on growth. I mean, a lot of this money is going for sales and marketing. They're burning money. They're trying to grow. They're trying to compete with each other. They're trying to build infrastructures. They're trying to, figure out exactly what the business model is that they're going to really hit those big monetization numbers. It's a very expensive business, shockingly, to run a bank before you're really well established. I don't know if that's a
what was everybody
news flash.
thinking? Yeah, exactly.
Newsflash: running a bank is expensive. Especially when you're trying to, not sort of set in your ways yet, and you're trying to figure everything out on the fly. It's a little pricey. But yeah.
And and speaking of like flies in the ointment, I mean, I think we were waiting for some big U.S. launches here from the Europeans. We didn't quite have that in 2019. We had N26 launched through a partner bank, but we didn't. It's certainly taking longer for foreign banks to get a foothold in the U.S.
Yeah, it's definitely been a lot harder. There's been the U.S. I think is trying to still figure out exactly with all the with it banking and opening up banking. I think a couple months ago there was that court case between the Office of the Comptroller and the New York Fed. I think between in terms of giving out banking licenses and
The fintech
who
license,
get
yeah.
yeah, exactly, those fintech licenses and trying to sort of keep things under control and how and that's going to be something that changes over the next year, 2, 3, 5, etc. But the craziest thing to me was N26 opening up in Brazil, which was like, I thought that was nuts because Nubank is there and that's like their home turf. And I was really surprised that they went down there, but I think it's sort of the extent of what we spoke about earlier, that it was, getting licenses in the U.S., different states, different regulations than Europe, a little harder in certain ways, easier in other ways, but it's just been a much more difficult process, I think, than was anticipated.
Right. And so, we've also seen sort of a divergence here of strategies. So you have like the Oak North model, which is a UK bank that is decidedly not buying licenses or acquiring licenses internationally and is expanding through a licensing strategy, a technology licensing strategy. And then you have the Revoluts and N26s that are in most markets looking to acquire local licenses and build local teams. And I think we're too early in that rollout to see which is the winning strategy. But I think that's something to keep our eye on in 2020.
Most definitely, couldn't agree more.
And so this was definitely a year of growth. It was a year of a lot of influx of cash. We did have one big failure and one eulogy, actually. Josh, if you remember, you so eloquently gave a eulogy on JPMorgan Chase's Fin. You want to tell us a little bit about what happened there?
Yeah, I think, what was the number? They spent like $5 billion, I think was the number. I don't even know, over like
They never actually said the number. We backed out. One of the executives had said today had spent like 20% of their yearly tech budget, which I think puts it at $1 billion or something like that. But
yes,
it was
that's
a lot of money. Yeah.
That's a lot of money to spend on a bank. And it was really funny how when you go back and look at the original press release, like we did on that eulogy, about how it looked like a 70-year-old guy making an app for a 20-year-old person. Like, I think they like those smiley faces, so let me put a smiley face in there. Those emoji thingies, it was just very It's just like, what were they thinking?
Yeah.
That they're doing that. But you got to give it to them that they just shut it down when it wasn't working. I give them credit for that, as crazy as it sounds. Like, it's not working. Okay, we're willing to take the hit on it. Get a little bit of bad press. I mean, it's people forgot about it after like a day.
Yeah, nobody talks about it anymore. You're right, totally.
Yeah, nobody's talking about it. It's also like, this is, $1 billion for the largest bank in the U.S. is like a rounding error
Chump
sometimes.
change.
Yeah, it's like not really that much, as crazy as that sounds, but it's really cool that they tried to do this. And I think I've spoken to startups, and one of the things that they said I think was really interesting was if challengers tried to fight on the turf of and the terms of traditional banks, they're going to lose. And if banks try to fight sort of on the turf of challengers, they're going to lose. Like, so, it's up to,
Do
I
what
think
they
it's up
do
to,
best, right? In a way.
exactly.
Yeah.
Yeah. It's so I think it's up to the challengers to really find what they can do better than the traditional banks, and it's up to the traditional banks to double down on what they do really, really, really well in order to retain their customers. And there's going to be people that go to challengers, and there's going to be people who stay, and there's going to be people who use both. But I think once, whenever you try to get a big, fintech or a big bank, which is so slow moving and it takes forever to make a decision just because of how that's what they are, trying to compete with a nimble startup, it's not going to get, it's, in certain ways they're going to fail, but in certain ways they have the potential to succeed if they just build on their strengths, like you said.
Yeah, like in retrospect, I agree with you. It's like, what were they thinking? JPMorgan Chase's app is good. Its its brand is unassailable. It's massive, and the fact that they were trying to create a new brand, a sub brand in sub markets, didn't really. It just, looking in retrospect, it didn't make sense. And I agree with you. Credit to them that they were able to shut it down quickly and move on from it. But I think that speaks to a larger trend also. I think the writing's on the wall. Like, it's getting really competitive out there, and Finn didn't necessarily have. I couldn't tell you what Finn stood for, or if it had a specific
trying to beat
market.
Marcus, maybe. I don't know. Hey, they're doing this with Marcus. Let's try to do it for us. I don't know. I have
Right,
no
it could
idea.
be, but then it was just a lookalike Marcus. It didn't really stand for anything.
Yeah.
One of the trends that I think was biggest in 2019, and we'll talk about this as we start to segue to talk about what the next year has in store, was the emergence of other non-banking brands into the banking market. We saw Credit Karma, Dave, MoneyLion, Betterment really kind of move strongly into the what I would call the challenger market. And I think the challenger banking itself as a term is probably old and outdated. We'll have to come up with a better term longer term, because these are just going to be banks longer term. The distinction between challengers and non-challengers, I think, will go away. But if you're a Power Credit Karma user and all of a sudden they rolled out their savings account early, in the third quarter of this year, heck, like, I'm already using it for 6 other different services. Why wouldn't I keep my money there as well? And then it's just a beautiful model when you have a software platform that already has rabid users, and loyal users rolling out credit products, I think, and banking products. I think it's a really powerful combination.
Absolutely. To go back on JP Morgan for 1 second, is that people forget that they came up with quick pay. Like, that
Good
was
point.
really awesome. I remember when that came out, and that was like, holy crap, this is really interesting. This is really innovative. And I think that's basically turned into what Clear Exchange and Zelle is now. But they're very innovative, and there are a lot of these players are very innovative. And I think that once you get to that point of retaining a customer, and that's sort of what we're seeing with the Credit Karmas and everyone else of the world, once you have such a hold on a customer, you can start offering all types of products and services on top of it. I mean, this is what I see every day with startups, especially in fintech, where you build one product, you get someone really, really interested in it, and then you start offering other products, and they just like your experience, and then they're just going to continue to use your other products just because of the relationship that you've already built with them. It's sort of like what Snapchat had when they had these millions of users and they didn't know how to monetize on them, but they just had them. And now they had to figure. It took them a while to figure out exactly how to offer which product that they would offer and which additional products they would offer. But because they had such a loyal fan base or customer base. And I think the same thing with Credit Karma, Dave, Betterment, like you're saying, is that once someone likes it, they're gonna be like, sure, I'll use this for everything. It's with the proliferation of APIs and fintech as a service companies and how easy it is to plug in a Plaid or a Square or a Stripe or create a digital wallet or Python libraries, everything else. It's really easy, and I think that gets into the bigger
Python
question also,
libraries?
which I don't know.
I just had to call you out on that one.
You can do it. Come on. I'm starting Udemy. I have Udemy classes about Python. Nice. Just that's the AI joke of that. Everything is just all the AI stuff is just library, like these libraries that you just import to piece it together, and you don't create anything yourself. So I backed it up a little bit. There you go.
See, I think what's cool about those examples that you give is that it's not just an add-on like savings account. It's that, and it's not just cross-selling me to some other product. It actually, like, adding a savings account into those products, those software platforms, make my experience better and stickier, and I get more value out of it by having them manage my money and move my money to different accounts. Do you know what I'm saying?
Absolutely, yeah. No, for sure. And I think that's sort of the other question that we have, for which we'll touch on, is who else is going to get into the mix? It's sort of like who are the other players? The mix? Exactly. That's a better question.
I think that's where we are right now.
Mix? Yeah.
So let's use that to look ahead to 2020. I know you had something that you're hearing a lot of from investors. Can you talk about one of the themes that you think is strong going into next year?
Sure. So I moderated a panel with with SumUp and Klarna in Germany a week ago, and really, really awesome panel about building and scaling and funding a fintech startup. And it was cool to hear from two unicorns about how they still have problems. They're still startups. They're not established companies, and the fact that it was bumpy along the way, can definitely provide a lot of positive motivation to people who are in startups right now or challengers or whatever, and things aren't going perfectly, that you can get there and have companies that are doing very, very well. But one of the other VCs that was on the stage mentioned that he's concerned that the market's softening up a little bit after this whole WeWork fiasco, specifically regarding a path to profitability. The fact that WeWork just the big knock on them when they were going public and in that S1 was just the unit economics problem and the fact that there was a lack of a path to profitability, and they were scaling well, but they hadn't figured out the unit economics problem. So that looks, and what he brought up is that looks similar to what a lot of the digital banks are looking like. So the question is now you have a lot of these digital challengers that raised in the valuations in the billions of dollars. And now the market is like, well, wait a minute, you guys, while we love the fact that you guys are growing, and every single metric that we've seen in all the press releases has been about user growth. Mm-hmm. We need to see, those are all the headline numbers, is user growth. And something we've spoken so many times about is I would love to see unit economics. I'd love to see churn. I'd love to see cohort analysis. Those numbers may come to the forefront. And will we see down rounds? Will we see changing of business models? It could be ugly theoretically if things don't get correct. And I don't know the numbers. I don't know the figures. This is just from hearing from industry experts, writing articles about how things are going on in terms of with the challengers and with a lot of these banks. That's really the issue is what is going to happen, and are they going to be able to show metrics for the next funding round that will justify upticks in valuation.
Right. I think we're still on the upswing, and I think it'll take one big brand struggling to raise that next sort of growth round, maybe doing a flat round to down round to kind of burn off the froth, because I still feel like we're still on an upswing here. But I do agree with you, and I think you can hear this out of some of the European banks, the Monizes out there. They're starting to talk about, how many of their customers actually have a direct deposit set up. metrics that really matter, I think, for the bank going forward. So I hope we'll start to see that and really move away from these sort of, they're almost laughable at this point, how many millions of customers they're gaining from, month to month. But I guess we'll see how that plays out. One of the themes that I wanted to talk about, and this was something in our Tearsheet has shown in their coverage and in our embedded conference in November, we're starting to see more and more brands act as banks. So it could be the Credit Karma model, where you're sort of in personal finance and you move into a banking product. Obviously, they're not, most of these fintechs aren't doing it with banking licenses. They're partnering with banks. But Dave did this, MoneyLion did this, Betterment did this. But we're also, Uber has become a bank as well. We saw that around Money 2020 this year about the emergence of sort of their money group and how they see themselves, how Uber itself as a transportation company sees itself as a bank to its drivers. We'll see more and more brands like that emerge this year where they come out with a really specific product for their own user base that includes banking products. And based on the banking as a service companies, these fintechs, these Python libraries that Josh keeps talking about, there's any brand that wants to launch a financial product can do that now. It's a reality, and it's a reality that it only takes a couple months. It could take theoretically a couple months. It doesn't have to take a couple years to launch these products. You can do it relatively quickly and start learning right away. And to me, that's one of the most exciting things and most transformative things about finance that I've seen in the years that I've been covering finance. It's really the emergence of non-financial brands into financial brands, and like that kind of changes the entire playing field for me, because then people are banking with the brands that they love and not necessarily with banks. We'll always need banks, but the bank's role will obviously is changing. Maybe their infrastructure plays, or their smart pipes or dumb pipes or whatever it is. But to me, this is one of the most interesting things out there.
Yeah, I mean, Facebook, Amazon, Google, Microsoft. I mean, what are they going to do?
Big tech.
I mean,
yes.
Yeah, like a lot of big tech with a lot of money and a lot of, products and a lot of user data. Got a lot of user data. I mean, Facebook's already took its little venture in with Libra, which was, I think they sort of took a step back on that, which is probably a good idea when you're trying to replace the U.S. dollar. Sort of like a let's move back and try something else. But I mean, all these tech companies and all these, I think it's not a matter of if, it's a matter of when. And then how crazy is it going to get? Like, how out there is it going to get in terms of like Instagram? Like, imagine if Instagram starts banking. I don't know what the craziest one I can think of is, but there's a lot of really interesting companies. And I think people who aren't haven't been watching fintech and don't understand fintech, and I've had this conversation with some other people who work in the VC who aren't following fintech whatsoever, and they're like shocked when I say that. You and I think that this is just an inevitability, and they're shocked. What do you mean they're going after that? Yeah, this is a next step. This is something that's very, very very obvious to I think a lot of industry experts that this is where it is going for sure.
And I think the one last trend I do want to hit on before we wrap up this 2019 Challenger wrap up itself is that I'm actually, and Josh, I don't know if you've seen this in your deal flow, but I'm actually seeing more new players emerge. And these aren't new players like the Credit Karmas and Daves that are existing players launching financial products. When I mean new players, these are startup challenger banks. But they're not the Revoluts, they're not the B2Cs. These are B2B. They're commercial banks, and they're typically focused on a specific demographic. Like maybe it's freelancers, or maybe it's small companies, or maybe it's high growth companies, right? But I have seen just in the past 2 quarters the emergence of new companies, which is kind of surprising because it feels like there are a lot of big players and there's a lot of money sloshing around. But there are new companies coming out and raising money and launching. Are you seeing that too as well?
I haven't really seen it early, because when I see an early stage company going, like a seed stage company trying to be a challenger bank, I ask them
pass.
Okay, been good 2 years. I've seen growth round companies they're working sort of on going after niche people, but I mean, at this point, it's sort of like you have the big sharks and you have these little fish. They're trying to swim around them, and maybe they hope to have a quick hit acquisition, but it's sort of like the same thing I've seen in invoice financing. Like you have Cabbage, you have Fundbox, you have Bluevine, you have the Half to a certain extent. All these, big invoice financing companies that are really well established and are doing really, really well. And someone's like, hey, I have a invoice financing company. It's like, well, okay, like cool, like it's a couple years too late, I mean, you could go for it, but it's the only thing you could argue why it would be positive is that if you think that it's a timing play and you think that the challengers are too early to the party and that they're just going to get into trouble. I don't think they're too early really. But you could maybe some like very, very niche players, going after something small that don't want to become, multi-billion-dollar global banks that want to basically become community banks at scale, I would call it, or smaller things at scale.
I don't know. I agree with that on the B2C. But these are B2B. I don't think anyone's cracked the commercial bank piece yet from a digital banking perspective. I don't think anyone's doing that well. And I think that it's such a huge market and there's such room for, as you said, niches and sort of subcategories. And I don't know. I don't think it's too late for these guys, but we'll see. We'll see if they can raise money. We can see if they can get a foothold and grow.
It's gonna cost. The issue is that it's just gonna cost them a lot.
We
of
know
money.
it's too much now, right? Like we know how expensive it is to build these things.
Yeah, it's for a B2B bank, and then to figure out the risk, like exactly what you're doing. If you're doing any sort of lines of credit, if you're doing, what you're doing and how you're going to differentiate yourself and do it without needing to raise hundreds of millions of dollars to expand quickly enough to get to the point where you're sort of cracking or not even hundreds, let's say, tens of millions of dollars. It's still not easy to do. And especially in the market that's might be tightening up, perhaps. I mean, we still haven't seen the market, the investing market tighten up, but it's possible that it might, after the whole everyone freaking out over WeWork. But again, that might change in a month or two from now once everything's calmed down a little bit.
Well, let's put it this way. Like if you're an entrepreneur or an investor funding one of these companies right now, you have to be going in with eyes open, right?
Absolutely. You have to know how realistic it is in terms of like who you're going up against, and know that you're going against some pretty massive gorillas, and I know who I'm going up against, and this is how I'm going to beat them. And if you can execute that, totally fine. And if you have the money to do it, even better.
Josh, I wanted to thank you. It's been great this year, talking and writing about the challengers. And I'm looking forward to 2020 as we get to talk about more colors and materials of debit cards. I think I'm looking forward to the upcoming year. And I'd like to thank all of our listeners as well for tuning in and sticking with us. And we've gotten a lot of good feedback. We hope to continue to go deeper and broader with our coverage here on digital banking.
Yeah, it's been amazing, and looking forward to having some awesome stuff going on and some more hilarious, ridiculous things happening, and would love to see some awesome traction. And nothing would make me happier than to see some of these banks, really take it to the next level and step it up, because it's good for everybody.
Happy 2020, guys, and thanks for joining us.
Happy 2020.
All the best.